Arvelyn Lewis, and I sell real estate. I'm sharing some stories with you, but I was talking to a good friend of mine a couple of days ago who is one of the major administrators in the Atlanta Housing Authority. And we were just sharing equally how much we have passion for seeing people become homeowners for the first time. She's in one of the departments that grants down payment assistance programs and the various programs that are available to first time buyers. And sometimes she sends me a buyer, um, and we just happen to be exchanging about that particular buyer. And it made me think about something that I thought I'd share with you. It's that window of time where people don't approach anyone. They're working actively to correct their personal credit profile before they do anything to make an attempt to buy a house, anything at all. Sometimes that may be trying to pay down all of their debts, whatever they are. They could be debts from the very first time they established credit with a credit card. You know, those credit cards that the bank sends you when you're 18 and you don't know what the heck you're doing. And you run out there and you buy up all of this stuff that you don't really need. You get your hair done, you get your nails done, you get a purse that you can't afford, all of this stuff, and not really realizing that you actually have to pay that stuff back. Well, that's probably not something. Now, wait, before I finish this thought, I want to make sure that you understand it is absolutely necessary to pay your debts, for sure. But things that are 10 years old, they might not be negatively impacting your credit as much as you may think. And if you go out there and revive that old debt, trying to get that paid down in order to buy a house, you might be negatively impacting your credit worse than you think. See, if that is now retriggering the credit clock, say something that's been lying dormant for 10 years, and you start now actively trying to clear that debt, you're making a negative thing become current again. And your lender, whenever you start to talk to them, might prefer that you not even bother that and keep that money in hand because you might need it to actually close on your house. There are things that sometimes people do because they just don't know what the credit process or the mortgage process is going to look like. They've only heard from family or friends or even from someone that they just happened to pass in the grocery store talking about how treacherous the mortgage process and trying to achieve a loan, it's so rough and tough on you. But I challenge you, it's important to just talk to a mortgage professional, talk to a realtor before you start trying to bring up old debts and rehash credits that may not even be a problem for you. No matter where you are in what you think your credit is, it's important to find out what they're actually going to be looking for in order to qualify you for a purchase. So before you start going out there trying to make your credit perfect, let's get you in front of a lender to find out where you are right now because you might be ready to make a purchase right now, today. And trying to do things that is going to make your score better, that's nonsensical too. Because there's certain kinds of programs out there that might help you if you don't touch it. There's down payment assistance programs, there's VA loans, there's FHA loans, there's doctor's loans, there's nursing loans, there's all sorts of things. And if you try to do this, this DIY that we try to do now, we're going to go out there and fix the car ourselves, we're going to paint the house ourselves, we're going to do all this stuff without getting the advice of a professional because WebMD said that I had cancer. Yeah, I have cancer. And yeah, don't do that. Don't do that. Don't fix yourself. You might not even be broken. So give me a call. Call a lender. Let's find out where you really are so that we can find you a house. Okay? I'm Arvelyn Lewis. I sell real estate.